Good morning, good afternoon. So we'll be reviewing yesterday's price action. And first, I'm using the liquidity strip and liquidity purge as a basis of the narrative of yesterday's price action for the ES and the dollar. So starting with the dollar, we noted here as the buy side liquidity, which price should ultimately go to. And because of this weekly mitigation block, we're expecting price to range inside of it before going through this high resistance liquidity one. So this is the weekly distribution. So dropping down to the daily, as you can see, this is the relative equal highs we are drawing towards to. But because of this high resistance liquidity one, we're expecting price because of this high resistance liquidity one and this mitigation block from the weekly time frame. We're expecting price to range inside of here, possibly inside of this fair value gap here, and keep ranging higher. To just be a choppy price action, but for the dollar, but it will be chopping higher for higher prices. So, all right, let's see the ES and get into the topic for today. So, so for the ES, we had price trade into this weekly inversion fair value gap here. This inversion fair value gap, which took price lower to sell side liquidity, resting here. And this weekly bullish order block here. So dropping into the daily time frame, as you can see. So this was our joint liquidity for yesterday's price action. This relative equal highs, this relative equal lows. I mean, this was the joint liquidity for this week, and this bullish order block here on the daily. So you can calibrate your weekly order block and put it here. So changing this to a daily order block. So as you can see, price we triggered into it here. This bullish order block here. So from the 1 hour time frame, we have this inversion fair value gap from the weekly time frame. Let's label this. This inversion fair value gap from the weekly time frame. And as stated in the previous video, we had liquidity purges. We had liquid buy side liquidity purged here. This place. So liquidity was purged here on the buy side. So we expected price to not trade back up here going into this week's trading. And this was a liquidity sweep here. And we noted from the previous video that for liquidity sweeps, price can still trade to it and trade because it is not in line with the higher time frame order flow. And higher time frame order flow for the ES, that is US 500, is bearish. So this is a liquidity, this is a sell side. So this right here is a sell side liquidity sweep. So when this liquidity was taken here, it rallied higher. And this rally higher, we see this as um, a fake out. This is as a fake breakout. So they will go long here and put their stops here. And price did what? Price traded down through their stops loss here. So for yesterday's trading, we went into yesterday's trading with a bearish narrative. From Tuesday's stream, we noted this. Okay, we noted this 1 hour fair value gap. We noted this 1 hour fair value gaps here from Tuesday's stream. So we expected, yeah. So from Tuesday's trading going into Wednesday's trading, we noted this 1 hour fair value gaps here. And the narrative was that for price to be bearish, if we are still bearish here and this is a liquidity sweep, and this right here is a liquidity sweep, and this right here being a liquidity sweep, we expected price to trade higher here New York after the New York opening window, after the New York trading window has finished, to trade back up to this relative equal highs, which is this. So this is the narrative that I'm trying to illustrate here. This was the internal dialogue I had going into Wednesday's trading. So this right here was liquidity purge. Let's call it LP. So this right here was a liquidity purge. So for narrative to be true, for narratives to be true, we expected price to rally up, to go higher, to make retail, to make uninformed money to think price is currently bullish. So they'll change their narrative now from a bearish bias to a bullish bias here. When price started rallying up here in Tuesday's trading, so price purged buy side liquidity here, and when it does this, we do not expect price to trade back into this 1 hour into this high here. that purged liquidity, which corresponds with the low of the 1 hour fair value gap. So as you can see, the high here is 5080.2, and the low of this fair value gap is 5080.2. So so every time you approach the chart, every time you come to analyze the market or come to trade, you should always refer to yourself as the market maker. You should, because you already know how the algorithm acts, the footprints of the algorithm. You should always refer to yourself as the market maker. So when you do that, you think, if I am the market maker, how will I engineer liquidity? What the market maker does is just engineer liquidity. That is all. That is the banks. What they do, the market makers are the banks, not your small retail banks or commercial banks. I'm talking about the actual banks, the central banks. So we noted here as buy side liquidity on Tuesday's trading, on Tuesday's stream. So I do a stream on the side for a small group of people, but that's not, it's filled up already. So yeah, we noted buy side liquidity here. So we noted buy side liquidity here, which will become a liquidity purge. So we expected price. We made the narrative for Tuesday going into Wednesday was that if we're the market maker now, we would expect price to rally higher, making retail see this as the market going higher and we are bottomed out here. So they will not be aware that this right here is liquidity sweep. This here will be a sell side liquidity sweep. So this right here is sell side liquidity sweep. So price will rally higher here to make retail see this, to make uninformed money see this as market bottoming out, going for higher prices. So when we took out this buy side here, buy side was purged here. So we're expecting price going into Wednesday's trading to drop below this sell side liquidity here. So from the 15-minute time frame, because this is a liquidity sweep, we are anticipating price to trade lower through this liquidity sweep. Because now when price valid here, when price valid higher here, we put their stop loss below this liquidity sweep, below the sell side liquidity. So we'll be interested in this sell side going into Wednesday's trading. So this was the sell side liquidity here and below for Wednesday's trading. So this was the sell side. This was the drawn liquidity for Wednesday's trading. And using the liquidity sweep versus liquidity purge narrative going into uh, Wednesday's trading, we noted here as a pool of buy side liquidity that price is likely interested in. And also here, so as you can see, there is buy side liquidity resting here, and also buy side liquidity resting here, and also buy side liquidity resting here. So we expected price to not trade back above this high here because liquidity was purged already on the buy side here. So every rally higher should be seen as a fake rally. So as price kept going higher here, it kept on purging buy side. Buy side liquidity was being purged to the upside. So anticipating lower prices. Yeah. And on the 5 minute time frame, so this is what we had here from yesterday's trading. So here was the midnight. Here is the midnight opening price. So here is the midnight opening price. And during the 10 a.m. to 11 a.m. New York window trading window, we've purged buy side liquidity. So expecting lower prices. While expecting lower prices, as you can see, we failed to get to this high here because going back to this high to purge liquidity again in is not required by the algorithm. The algorithm already sees that as a liquidity that has been purged, seeking sell side, and the trying to and it's trying to fade out the smart money that sold here. So the ones that didn't take profit here, when price also rallying higher here, they will become fearful and scared. They might take out their position here and think price is going higher. They are expecting higher prices, but narrative is bearish for the ES. So going into the trade review for yesterday's trading. So because we're expecting lower prices here below the sell side, because we're expecting lower prices below the sell side liquidity, and we have this sell side liquidity here, which was the relative equal lows here. We thought we see this relative equal lows here as support and resistance, as a support and resistance line. This is what we want. We want them when this is support and resistance line. So we thought we see this now as a support and resistance. So when price break out, they'll put their entry here without knowing where to put their stop loss. So let's go to the 3 minute time frame. So all this were illustrated here. So because this liquidity here has been purged here, anybody going higher here is seen as a manipulation leg. Yeah. So we have a low from here on this trading. Any rally going higher now above midnight opening price is seen as a suspect rally. So this is the accumulation leg. Price was accumulating here. So we had a suspect rally. We started going up here to take out buy side liquidity, which was resting here. During New York window, during the silver bullet window, that is the 10 a.m. to the 11 a.m. window, we had price trade into this fair value gap here, inside of this imbalance here. We traded inside of this imbalance here. So when we did that, when when price traded inside this imbalance, when price traded inside this imbalance here with this 10 1006 candle here, when price traded back inside here, we had a quick drop down here as a change in state of delivery. So this makes this up close candle here as the bearish order block for this price action, for this body of price action. So this right here is the bearish order block. So this right here is the bearish order block. So if you are anchoring your entry model to this order block here, you enter from this order block here, going for sell side liquidity and lower, going for sell side liquidity and lower, and your stops should be above this imbalance here because price can still trade back into this imbalance. Now, for this retail support and resistance, as you can see, this now is a very clear form of liquidity. It's a very clear form of liquidity. So when price rallied higher here, this was a liquidity sweep. This was a liquidity sweep, yeah. So when price rallied higher after taking out this liquidity here to pair with this buy orders here, and this buy orders here was used as sales, as this resting buy stops here were used as sell orders here. So when smart money sold up here, price dropped lower here, leaving this gap here. This is a breakaway gap. So when a breakaway gap is seen in price action, we're expecting lower, like it means it's extremely bearish. It's an extremely bearish body of price action. So we had that drop here, and this retail support and resistance. When price was dropping lower here after creating this bearish order block here, when price was dropping lower here, going for money, we see that as retail. People that trade with retail mindset, they will see this as a support that should turn into resistance. So, and what we take from that is that price support does turn resistance. So we do not expect the low here. The low here should act as the high here. So price did what price traded above, made a wick above to do damage to traders that use here as a support and resistance level. So price goes up here to do damage here, and inside of this bearish order block, so traded lower here, below this low, and back lower also here, creating this imbalance here.